This is the only trading strategy you need for 2026 to become profitable and generate consistent results, whether that's with getting prop firm payouts or using your own live account. I made over $800,000 last year in verifiable broker statements, and I'm going to be sharing this strategy with you step by step. I learned this strategy from my godfather, who was a trader at Goldman Sachs for over 30 years, and by the end of this video, you are going to have a clear idea of exactly how you can trade this strategy as soon as tomorrow. Now, there's no fancy BS indicators, there's no complicated patterns, it's just pure institutional order flow. I'm going to break down the 3 setups that make up this strategy. I'm going to show you real trade examples with exact entries, stop losses, and targets. And I'm going to show you how I automated this entire system so that it trades 24/7 without me having to be there to watch the charts. So if you're serious about making money in 2026, this is your guide. Before we dive in, let me tell you why this strategy works and why you should listen to me. My name is RP and I've been trading for around 6.5 years, but more importantly, I learned this strategy from my godfather, who spent 30 years trading at Goldman Sachs before he retired. He taught me something that changed everything. Banks don't look at charts the way that retail traders do. They look at where the most orders are, and they move prices to these levels to get their orders filled. This is called liquidity, and once you understand how to trade liquidity, you have a massive edge over 99% of retail traders. Most retail traders are using indicators, support and resistance, Fibonacci retracement, all this stuff that doesn't actually matter. They are trying to predict the market. We are not predicting anything. We are following the money. We're trading with the institutions, not against them. And that's why this strategy works. It's not based on some random pattern that I found. It's based on how the biggest players in the market actually move price. All right, so let's talk about the foundation of this strategy, liquidity. What is liquidity? In simple terms, liquidity is where the most orders are clustered in the market. Think of it like this. Imagine that you're at an auction and there are 100 people trying to buy the same item. That's a high liquidity area. There's a lot of interest, a lot of orders, a lot of activity. In the market, liquidity pools form at a specific level. And these levels are previous session highs and lows and the 8 to 8:15 a.m. Eastern Standard Time opening range candle. Why are these levels so important? Because this is where retail traders place their stop losses and their breakout orders. Above yesterday's high, you have all the breakout traders with their buy orders, and below yesterday's low, you have all the long traders with their stop losses. The big banks know this, and they engineer moves to these levels to trigger these orders and to fill their own massive positions. My godfather explained it to me like this. Banks don't care about support and resistance. They care about where the orders are, and they move price to these levels to get the orders filled. So our job as traders is simple. Identify these liquidity levels and trade the reactions at those levels. And that's exactly what this strategy does. Now, there are 3 main setups I trade at these liquidity levels. Let me break them down for you. All right, the first setup is the break and retest. This is my bread and butter. This is the setup that makes me the most money. Here's how it works. The first thing you do is you go to ES Futures and you make sure you're on the 15-minute time frame, and then you go right here, you find this rectangle tool, and you mark out the bottom of the 8 a.m. candle all the way to the top, just like this. Whoops, just like that. The entire candle. I'm glad I actually made that mistake so you guys can see. You want to mark out this entire candle on the 15-minute time frame. This is very, very important. The second thing you're going to do is you're going to wait until 9:30 a.m. Eastern Standard Time, and you're going to see which direction price is broken out to. So today, we were able to see that price had broken out to the upside, and we were waiting for a retest. And when we're entering, we either enter off of the midpoint or we enter off of the top of the zone for longs, and if we're taking shorts, we can enter off the bottom of the zone. So the key thing with finding entries with this setup is understanding the exact move we are looking for. We are looking for a break, a retest, and then a continuation in the same direction that we broke out to initially, right? So if we broke out to the upside like we did today, we're looking for longs when we touch either the top of the zone or the midpoint of the zone. Now, if we were taking shorts, we would simply be looking for the exact opposite. We'd be looking for a break to the downside, a retest, and then a continuation to the downside, right? Just want to give you guys an example of how both of those work. Now, let's go ahead and break down this trade I took. So the key thing here is when you are looking for entries, you want to be on the 5-minute and the 1-minute time frame, right? It was very clear to me that price was respecting the top of the zone. So what I did is I entered right here when I saw price showing some very, very clear signs that it was bouncing off the top of the zone. And then as it was holding above this zone, I entered again right there because this bounce was just ridiculously bullish to me. So I was in my entire position right there, and then I got out of this trade right here for a nice 1 to 3 risk to reward. We can pop up the broker statement on that specific trade. I made around $10,432. So just to recap, right? The trade looks like this. We break out to the upside. You enter longs when either the midpoint is being respected or the top of the zone is being respected. You target 15 points with a risk to reward of 1 to 3, just like so, and voila, right? The market gave you a lot of different tries to enter this trade. You could have entered here, could have entered here, you even could have entered there, and you still could have caught that trade. I'm gonna show you guys one more example of this setup just so you understand it very clearly. So now let's go ahead and look at this day, right? So the first thing we're gonna do is we're gonna go on the 15-minute time frame. We are going to mark out our first 15-minute candle that happened right there at 8 a.m. Boom, just like so. We're going to wait for a break to either the upside or the downside, right? Today, it would have been pretty clear that we are, breaking out to the downside. So this is at 9:30, right? Price is at the downside. We're looking for a retest. This would have also been a time where we take the trade from the bottom of the zone, right? 5-point stop loss. Stop loss is right above the midpoint. Target 15 points. And boom. There you have it, everybody, right? This trade, you would have had to get in very quickly, right when we tapped the bottom of the zone. A lot of people probably didn't get filled, but the beauty of this setup is that it's very, very simple. And if you take a loss, you know that you're wrong instantly. You get stopped out. And when you take a win, it's pretty clear that you're right because price will usually hit your take profit relatively quickly because we are scalping. Now let me explain the psychology behind this setup. When price breaks below a key level, every trader who was in a long at that level is now trapped. They're in the red and they are desperate to get out of break even. So what do when price comes back up to retest that level? They sell, and that selling pressure fuels the move down. We are capitalizing on the pain of trapped traders. Now this setup doesn't work 100% of the time, nothing does, right? But it works often enough with a 1 to 3 or a 1 to 4 risk to reward ratio that I'm profitable, even though I only win around 62% of my trades. For example, recently I actually took a small loss with this break and retest setup, but I took a beautiful win right after on another setup that I'm going to teach you right now. All right, everybody, the second setup is bounces and rejections off of key liquidity levels, and I love this setup because it is so incredibly simple, but it's very powerful and it's made me quite a bit of money. So this setup is incredibly simple. In order to understand this setup, you need to understand what an untested level is. An untested level is simply a level like this one that has not yet been touched. Tested just means touched, right? So when you hear break and retest, it just means break and retouch. So when you hear test, think touch. So this level is untested, right? This level has not yet been touched until, obviously, we took a trade off of it, which is what we're about to discuss. So when we have an untested low, we are looking and we are observing exactly how price is reacting to this low on the shorter time frames, on the smaller time frames. So with this setup, I like to target around 20 points, and I like to have my risk to reward at around 5 points, 5 to 10 points, depending on how many points I'm targeting. But right here, we can see that immediately when price hit this level on the 1 minute time frame, it had a very, very strong bounce. So I didn't enter right here. I actually entered after we had a few candle closures, right? I waited for 5 candle closures, so a 5-minute candle. And then I entered and I actually caught 22 points off of that trade. I had my stop right here for about 5 points, giving me a really, really good risk to reward of 1 to 4. And it's as simple as that, everybody. I absolutely love trading this setup, and a great analogy is to almost think of price like a bouncy ball. If I hold a bouncy ball right here and I drop it on the desk, it'll bounce a little bit, versus if I take this bouncy ball and just chuck it on my desk, it'll shoot up. Think of price like a bouncy ball. When price comes down super, super fast, right? You can see that we had a few 1-minute candles and price went down 30 points. It's likely the price is gonna bounce back up. Versus when price is, slow grinding or moving super slow, it's not as likely that we will get that bounce. A nice sign that we are gonna have a great reaction from one of these levels is when you see a wick that comes under the level but never closes, right? It's showing us that price tried to break below this level, but nobody was willing to sell for below $6,900. and 39.75, right? Like I said, price is an auction, and when nobody's willing to sell, the buyers will take control. All right, everybody, I'm gonna show you one more example of a bounce setup, and then we're gonna talk about rejections. So right here, you can see that a very similar scenario played out. We had an untested London low right there, right? Meaning a level from London session, right? The lowest level that had not yet been tested. So when it was tested, we went to the 5-minute time frame and the 1-minute time frame, and we observed that price tapped this level, but it did not want to come under. We had that wick that I'm talking about that comes below the level, but doesn't close above it. And then we had a beautiful reversal for about 20 points. Unfortunately, with this trade, I only caught a 1 to 3 because the market was a little choppier in the morning. So I was just trying to get in and get out, but I still made around 10 grand off of that trade. So there's absolutely nothing to complain about. I usually like to target a 1 to 4 with this setup just because when we do get a bounce or rejection, we usually move a lot. All right, everyone, now we are going to focus on rejections. The great thing about rejections is they are the exact opposite of a bounce. So you guys remember how I told you when you are looking at a bounce, you can almost look at price as a bouncy ball. You're dropping the bouncy ball on a surface, it's bouncing up. Think of the exact opposite with a rejection. So a rejection is me taking a bouncy ball, throwing it at the roof. The roof is the high, and then price is rejecting, or the ball is coming back down. So you can see right here that we're gonna go ahead and mark out this untested high. And I mark out my highs in black just because I have my selling candlesticks in black. So I like to keep everything kind of in sync. And then we are going to go on the shorter time frames or the smaller time frames, the 5-minute. And we're going to see that price failed to break above this level. Not even once, but twice, failed right here, or 3 times, failed right here, and then right here. So we're going to enter some shorts. We're going to target on this specific trade, we're going to target 30 points with a stop loss of 6 points. So that should give us a risk to reward of 1 to 5. And voila, there you have it, everybody. That is a rejection trade. I love rejections. I would say that about 60% of the time I'm trading break and retests, and then the other 40% when the break and retest doesn't play out, I'm trading either a bounce or a rejection. Why do these setups work so well? Because these levels are literally magnets for price. Retail traders have their stop losses at these levels, so when price hits them, there's going to be a big reaction. The banks know this, and they push price to these levels to grab liquidity, and then they reverse. A great way to think of it is like ping pong. Price is bouncing between the high and the low. Your job is to identify the high and the low and catch the bounces. So I just told you guys my 3 favorite setups that I absolutely love. 1 is the break and retest. The second is a bounce, and the third is a rejection. And bounces and rejections kind of go together because we're targeting the same amount of points with the same stop loss. We're just looking at either shorts off of highs or bounces or longs off of the low. And these setups work because they're based on where the liquidity is. We're not predicting the market, we are following the money. All right, so now that you know the strategy, you know the 2 setups, you know how to trade them, and you know why they work, and if you apply the strategy consistently and you execute consistently and flawlessly, you can be profitable. There's no question about that. But here's what you need to understand. There's a difference between being profitable and maximizing your edge. Right now, if you're trading manually, you are facing 3 challenges that are limiting all of your potential. The first challenge is time. This is a huge thing for most people. You can only trade when you're watching the charts. If you have a job, if you have family, if you have other commitments, you are going to miss setups. The best opportunities do not wait for your schedule. They don't care if you live on the West Coast and you have to wake up early. They are just on the charts. The second challenge is execution. Even with a profitable strategy, human execution is inconsistent. You know it. You hesitate on entries, you cut winners early because you're scared, you revenge trade after a loss. These are normal human behaviors, but they cost you lots of money. The third challenge is scalability. If you're manually trading, you're limited to how many setups you can catch in a day. You might catch 2, maybe 3, but what if there were 10 setups across different markets and different sessions? You are leaving money on the table. Now here's the good news. These challenges have a solution, and that solution is automation. When you automate a profitable strategy, 3 things happen. First, you remove the time constraint. The algorithm trades 24/7, it doesn't sleep, it doesn't take breaks, it catches every setup, whether you're at your desk or not. Second, you remove human error. The algorithm executes the strategy perfectly, every single time. No hesitation, no emotion, no revenge trading, just clean execution. Third, you scale your edge. Instead of catching 2 to 3 setups a day, you're catching 10, 15, sometimes 20 setups across multiple markets and sessions. You're maximizing your strategy's potential. This is how you take your trading to the next level. Not by finding a better strategy, you already have a profitable strategy, but by executing it better. And that's what I want to show you now. I'm going to walk you through the 3 algorithms that are built on the exact principles I just taught you, and I'm going to show you what's possible when you remove the human element from a profitable strategy. Because whether you use these algorithms or you build your own or you find another solution, the lesson is the same. If you want to maximize your edge in 2026, you need to think about automation. So let me show you what that looks like. All right, everybody, here's our first algorithm. This algorithm is a scalping bot that trades ES futures. Here's a back test over the last 5 years or so. You can obviously see that we're profitable over 2,901 trades. Now I'm gonna go in detail and show you guys a few setups that the bot has taken. So right here, we entered some longs at this London low right there. Beautiful, beautiful trade. We took profit right there initially on 50% of our position for 30 points. Then we took profit again for 55 points. So this is a beautiful algorithm because it scalps, but it also has the ability to trail trades and catch trades like that. So right here, we entered shorts at this untested London high, and then we took 50% profit. So we took profit with half of our position at 30 points, and then we took full take profit literally at the low of the day for 60 points. So on that trade, we made a lot of money. Our clients are absolutely loving this algorithm, guys. My man Nathan just got his first payout. He's been with us for a few weeks. He was using the ATR bot. Now, the reason I'm showing you this is not to sell you the algorithm. It's to show you what's possible when you remove human emotion and human error from an already profitable strategy. The lesson here is simple. Consistency beats brilliance. Now I'm going to show you guys another one of our algorithms. This bot is a scalping algorithm that scalps NASDAQ on the 5-minute time frame, and it's specialized in trading with prop firms, right? So this bot is actually called PropBot. Trades very similar to me. I'll show you guys some trades that it's taken, right? So we have some shorts right here. We have some other shorts right there. You can see that we took longs right there and we took profit there. That was a nice little trade. Caught some beautiful longs here on this move up before we absolutely collapsed and moved down. Great thing is the algorithm actually missed this entire move down, right? So we didn't take any losses on that move down. Then we took some more longs right there at the bottom. Obviously the daily profits are cool, but the main thing is that over the past 5 years and over the past 2,964 trades, we have an 80% win rate and we are consistently profitable. That is the true flex, guys. That's the true value in these algorithms, is the long-term profitability. You can see right here, this is my text on Instagram with one of my clients, and he actually said that he just got his first payout from running PropBot. He said, thank you, and the thing's a beast. Another one of our clients said that he has, in less than a month, he has 5 50K funded accounts with a nice buffer, and he's a couple thousand away from having 3 100K accounts passed, and he said that he's absolutely loving it. He said we're killing the game. Now this brings me to our final bot, right? This bot is a little bit different because it trades on the 1 hour time frame. This last bot I showed you traded on the 5 minute, the first one on the 1 minute. This one trades on the 1 hour. So you can see right here that we entered longs at this low. We took profit right there, took some shorts right there, took profit there, entered longs there, took profit there. And this bot is really cool. So what this bot does is it trades my strategy, but on a little bit of a zoomed out time frame, right? So it trades on the 1 hour instead of 5 minute, which is nice because you're not always wanting to scalp. Sometimes you just want trades that are, swinging when you want to capitalize on a trend. And as always, this bot is profitable. You can see the backtest over the last 5 years and 2,239 trades. Obviously, it's going to be a little bit less trades. Like the other trades that I was showing you was like 3,000 trades and 4,000 trades. This one's going to be a little bit less just because it's a swing trading bot, but nonetheless, it's still profitable. This is a text that I received from one of our clients that's using that bot. He said, hey man, this isn't a technical request, but a thank you. He finally passed his eval, hit a $9,000 profit target in a little under a month. He's loving it. And then another guy right here who's actually trading on his live account. He made around $2,000 in a day using this prop bot. And another guy here who had some nice results using the Voodoo bot. Obviously, we will take losses. Like, let me find a loss, short stop loss. So right there, we took a small loss. But the main thing is that we are consistently profitable and that our wins are bigger than our losses, and that's what matters. The lesson here is very simple. Volume beats home runs. And that's what algorithmic trading allows you to do. It allows you to execute more trades more consistently than any human ever could. So these are all the algorithms. Each one serves a different purpose, but they all prove the same point that algorithmic trading is the future. It's not about being smarter, it's about being more consistent, it's about removing emotion, and it's about executing a proven strategy perfectly every single time. Whether you want to use our algorithms or you want to build your own, the core lesson is the same. If you want to compete in 2026, you need to automate. Now, I don't want you to just take my word for it. Let me show you these algorithms running on a real funded account. Here's a trade from yesterday. You guys can see the executions on there. You can see where I entered and where I exited. Here's another one right? This is one from the intraday trend bot. You can see that we caught a nice move on NQ. Now I'm going to go over and click on the broker statement, right? You can see that these are the reports. These are real trades on a real funded account with real money. This is not a demo account. This is not a simulation. These are real revenue generating assets working inside live funded accounts 24/7. All right, so let me recap everything that we covered in this video. I showed you the only trading strategy that you need for 2026. This strategy is based on institutional liquidity principles that I learned from my godfather at Goldman Sachs. I broke down the setups that I look for: break and retest, bounces, and rejections. I showed you real trade examples with exact entries, stop losses, and targets. And I showed you how automation can take your trading to the next level by removing the time constraint, removing human error, and scaling your edge. Now here's what I want you to do. If you're serious about maximizing your edge, and if you want to see how you can take this strategy and execute it at the highest level, there's a link in the description, and I want you to book a call with me and my team. We are going to show you the full back tests, the live results, and exactly how these algorithms work. And we're going to help you figure out if automation is the right step for your trading. But whether you want to work with us or not, I want you to succeed. I want you to understand that this strategy works, and if you apply it consistently, you can do quite well this year. So if you got value from this video, drop a like, subscribe to the channel, and drop a comment letting me know exactly what you've learned. Thank you all for watching. I'll see you in the next video, and until then, keep learning, keep growing, and let's make 2026 your best year yet. Peace out.